How ancient money tricks became today's financial control system. Narrator slow, serious tone. What if I told you that the way your bank works today, the way your salary moves, and the way governments manage the economy wasn't invented by modern economists? What if these systems, interest, inflation, artificial scarcity, and even debt itself, weren't innovations of the last few centuries but very old tricks, engineered thousands of years ago? Tricks designed not just to move wealth, but to control people. Because the greatest discovery in human history might not have been money, but how to control society through money. And the most shocking part, we're still using the same tricks. Today, we reveal how the ancient world quietly built the financial control system we now live inside, and why escaping it might be the hardest challenge of the 21st century. To understand the modern world, you have to erase everything you think you know about money. Most people believe money evolved naturally. From barter, to coins, to banks, to digital payments. But the truth: money didn't evolve. It was engineered. Engineered by rulers, priests, emperors, kings, and later bankers. Each adding a feature that seemed helpful but always ended in one outcome: more power for them, less freedom for everyone else. Across Sumer, Babylon, Egypt, Rome, China, leaders discovered the same principle. If you can control the money, you can control the people without ever lifting a sword. This is the missing link between ancient empires and your modern bank account. This is the story of how each era added one financial trick until those tricks fused into the control system we live under today. A system that looks new, but underneath, it's thousands of years old. Let's go back to the beginning. Section 1: Origins, the first financial trick. 1. The birth of debt. Sumer, 4000 to 3000 BCE. The earliest civilizations didn't invent money because they needed convenience. They invented it because rulers needed control. Clay tablets in ancient Sumer show the first recorded financial trick: debt. But not just debt. Debt with interest. Farmers who borrowed grain during famine didn't just return grain. They returned more grain. And priests claimed this system was natural, because the gods supposedly demanded repayment with interest. This was the first trick. Trick 1: turn survival loans into never-ending obligations. And it worked so well that by 3000 BCE, most farmers in Sumer were borrowers instead of owners. Their labor became predictable. Their production became trackable. Their freedom slowly vanished. Sound familiar? But rulers realized something else. If too many people owed too much debt, rebellion was inevitable. So Sumerian kings invented another trick. Trick 2: debt cancellation, but only when it benefits the rulers. They called it a clean slate. A king would wipe all civilian debt. Not out of kindness, but because it restored economic productivity. It kept people working. It kept taxes flowing. Debt was not just a tool. It was a lever: push when needed, release when threatened. Exactly like modern monetary policy. Section 2: the rise, gold, coins, and tax control. 2. Egypt, the scarcity illusion, 2000 BCE. Egypt discovered an even more dangerous trick. Not interest, not debt, but artificial scarcity. The pharaohs understood if people believe money is scarce, they'll work endlessly to get it. Grain receipts stored in royal granaries became the first proto-currency. But only the state could issue them. Only the state could validate them. Only the state could decide how many existed. This was the next evolution. Trick 3: make the government the only legal source of money. And if people wanted money, they had to serve the pharaoh. In labor, in farming, in building monuments. A controlled money supply equals a controlled population. 3. Lydia and Greece, coins and mass trust engineering, 700 BCE. The Kingdom of Lydia introduced the world's first standardized coins. Not because people wanted convenience, but because armies needed to be paid. Coins allowed rulers to buy loyalty. And coins allowed rulers to tax citizens in a standardized way. Then came the twist. If rulers demanded taxes only in official coins, then citizens were forced to join the monetary system. Trick 4, taxation forces adoption. People didn't choose money. Money chose them. 4. Rome, the ultimate manipulation. 300 BCE, 300 CE. Rome perfected financial control. When emperors needed money, they didn't raise taxes first. They didn't borrow first. They debased the currency. Silver coins slowly became bronze. Then copper. Then nearly worthless. But prices didn't rise instantly. By the time people noticed inflation, the state had already spent the wealth. Trick 5, inflation. Take wealth slowly and visibly. This trick never died. It just changed forms. Section 3, the breaking points. Every empire eventually pushed its financial tricks too far. Sumer. Debt grew faster than harvests. Famine and rebellion followed. Egypt. Currency scarcity created class divisions so severe that workers revolted. Rome. Hyperinflation destroyed savings and shattered trust. Soldiers demanded payment in gold, not coins. China, Tang and Song dynasties. Paper money caused runaway inflation and multiple dynastic collapses. Across the world, the pattern was identical. Financial tricks gave rulers power, but eventually destroyed the societies that used them. The world should have learned. But instead, modern bankers rediscovered these tricks and added new ones. Section 4, the transformation into the modern system. 1. Medieval Europe, the birth of banks. Merchants realized something powerful. People don't check their gold every day. So Italian banking families began issuing receipts for stored gold. People traded these receipts instead of the gold itself. And because no one could check how much gold existed. Trick 6, fractional reserves create more money than you actually have. Banks became richer than kings. 2. The nation-state era, debt as a weapon. Countries learned to borrow money instead of raising taxes. Wars, colonies, and expansion were funded with loans. Loan citizens paid back for generations. Trick 7, national debt controlled the population using obligations they never agreed to. 3. 20th century, the dollar empire. After World War II, the US discovered Rome's trick book and perfected it. Peg global currencies to the dollar. Peg the dollar to gold. Then, in 1971, remove the gold. Now dollars had value because the US government said so and because the world had no alternative. Trick 8, fiat money, value by decree, not by reality. This turned the entire planet into a debt-driven machine. Savings lost value slowly through inflation. Debt increased endlessly. Governments printed more whenever needed. The ancient tricks were now global. Section 5, fallout and failed fixes. Every time the system began to fail, new solutions appeared. But each solution deepened the trap. 1. Central banks created to stabilize actually destabilized. Central banks were supposed to prevent crises. Instead, printing money became their default action. This directly repeated Rome's final mistake. 2. Gold standard removal introduced to increase flexibility. Instead, it removed all limits. Money creation became infinite. This repeated China's collapse under uncontrolled paper money. 3. Derivatives and financialization meant to spread risk. Instead, they concentrated risk. Just like Sumerian debt cycles. 4. Austerity policies. Ancient rulers used tax collection during famine to force obedience. Modern austerity is the same pattern. History keeps repeating because the incentives never changed. Section 6, modern parallels with shocking data. You might think today's world is different. But look carefully. The ancient tricks are still operating. Just with digital interfaces and more sophisticated branding. Modern parallel. 1. Debt explosion. Global debt today is over $315 trillion. more than 3x the world's GDP. Ancient Sumer collapsed when debt reached just 2x harvest output. We are far past their danger point. Modern parallel 2, inflation is invisible tax. 40% of all US dollars in existence were created in just 2 years. Rome debased its currency slower than that. And still collapsed. Modern parallel 3, artificial scarcity. Housing, healthcare, education, food. Prices rise faster than wages because scarcity is engineered. Just like Egypt's grain system. Modern parallel 4, a digital control. China's social credit plus digital yuan. EU's proposed digital euro. US CBDC discussions. This is the Pharaoh's granary system. But automated. Modern parallel 5, taxation forcing adoption. Governments say CBDCs are optional but taxes will be payable only through them. Exactly the Lydia and Roman playbook. We're not watching a new system emerge. We're watching the ancient system upgrade. Section 7, the repeating cycle. Every era follows the same chain. 1. Money is introduced as a tool. 2. Rulers centralize control. 3. Debt expands faster than production. 4. Inflation or scarcity becomes policy. 5. Society collapses or revolts. 6. A new system rises, using the same tricks. The tragedy is not that we repeat history. The tragedy is that someone always benefits from the repetition. Conclusion: 3 takeaways plus warning plus call to action. Takeaway 1. Money has always been a control system first, and an economic tool second. Debt, inflation, scarcity, these aren't bugs. They're features, perfected over 5,000 years. Takeaway 2. Every financial trick from the ancient world still exists today, just digitalized. The interface changed. The underlying mechanics did not. Takeaway number 3. The future depends on whether people understand the system or stay controlled by it. And here's the warning. Warning. The next era of money, digital, programmable, trackable, could become the greatest control system ever created. Unless people understand its origins, they won't see its consequences. Until it's too late. Call to action, natural, not forced. If you want more deep, serious breakdowns like this, stories that reveal what's happening behind the financial curtain, make sure to like this video, subscribe, and turn on the bell so you don't miss the next chapter. Because understanding money is understanding power. And the more you know, the harder it becomes for the system to control you.